Hello, promoted Marcus. This is Ahura with Mr. Trump's inauguration and market reaction analysis. Let's see what happened in the inauguration day and how the market reacted to these orders and decisions that made has been made at the first day. But before that, let's first to have a short review on what happened in economic calendar. Let's have a short review on the first day as well. Yesterday, I mean the first day of this week. Yesterday we had a Chinese central bank monetary policy meeting and interest rate decision. They had no change in the policies and interest rate held the rates for 1 and 5 years primes at 3.1 and 2.6%, as it was what they expected. We know that the Chinese government and the central bank, they already had too many stimulus in the plans at the last quarter of 2024. So for now, they may continue the policy of wait and see for 1 more month and see that how the market going to react to a new administration in the United States and generally the market condition, and then they're going to change the policies most possibly, most probably. Besides of that, we didn't have much important data to watch. The inflation we had inflation numbers, some producer price index or producer inflation in Germany as well, which fell by 0.1%, but market ignored to look at these data as the main data. The focus was on Mr. Trump inauguration. Today, so far we had labor market data from Britain, United Kingdom, where we were expecting to see the unemployment to be held at 4.3%, but it missed the market expectation and increased to 4.4%. That can increase the possibility of cutting the rate by another 25 basis points in next meeting, as the economic data also showing the which numbers there, and now we can see the labor market also is getting bigger. So it's a time for central bank to continue cutting the rates and lowering the hawkish sentence there, hawkish tones, and let's go towards they may decide MPC to moving towards more dovish tendencies. Later today in the market, we'll have a ZEW economic sentiment from Eurozone and Germany, but main important data may be in the calendar. In the US season will be the Canadian inflation numbers, where we are expecting to see a little bit more fall in Canadian inflations, but mostly right now the Canadian economy is affected by the order that yesterday we had, which we will talk about that. On the earnings front, yesterday we didn't have important earnings to watch, but today we're going to have the Netflix, Charles Schwab, and 3M, mostly United Airlines Holding. These are the main earnings that we have to watch. We are expecting to see a little bit better than expected for all of them, for the EPS and revenue both. Let's go to see what's happening in inauguration. I will open the chart and I will explain the chart's reaction and the decision made. Before inauguration, many market analysts and even the politicians, they were waiting, and usually me as well, we were waiting for more orders to be more orders to see from the Mr. Trump's. But lack of the orders, especially the tariffs, lack of the more orders. Actually, we had some orders, we will talk about them, but the lack of the orders, especially about the tariffs and the signals, like for more talk, like for example, we know that Mr. Trump, we know that we saw the TikTok CEO in Mr. Trump inauguration in one hand. On the other hand, they gave more 90 days to the TikTok to see if they can find another buyer in the United States or not. Anyway, when we had that, and also inauguration speech, we didn't have anything specifically about the tariffs against China. So market accepted that as a positive signal. So this positive signal and the lack of tariffs, they put the pressure on the US dollar index. So the US dollar slowly fell But still, there are orders that Mr. Trump, especially for Canada and Mexico, we had ordered that Mr. Trump said that they're gonna start the tariffs 25% tariffs gonna start from February 1st. And in about other countries, he declared that the government gonna see all international agreements, and they will put they will put the U.S. or America first, and they may change in some of these agreements, and they may find some new tariffs. So everything is going to be seen unstable, and somehow we can say that the market uncertainty going to be happening next 2 weeks until Mr. Trump's administration can review the all agreements, especially the main agreements with the Eurozone, Japan, and China, to see what they can change and how they can change these agreements. So therefore, US dollar index a little bit fell after inauguration, but that could not be the sign of the shortfall right now, because before inauguration we saw that the dollar increased almost towards 110, and now dollar index around 180.30, which is not a low number. So still the US dollar is still strong, and we can say we can see more slight movements around these numbers around 108 mark to see the market uncertainties where it goes, and then we can decide the next trend. But for now, with the market uncertainty we don't know what's going to happen exactly. So market going to wait few more days to see more clear information and data from White House. Therefore, for US dollar index, we would see, we most probably we will see the side movement to be continued. At the same time, this weaker US dollar helped the gold to increase a little bit its price. And we talked before about that, about the gold, that especially in the weekly outlook, that the gold for now still in a buy position, both technically and fundamentally. The uncertainty in the market can support the gold to increase. The gold target 2,780 is the next target, which we saw previously in October. On the energy market, there was some important orders. We had several orders and decisions that affected the markets. First, we know that during the Mr. Biden's administration, we had orders that when they put the sanction against Russia, United States started to use its strategic stocks and this stockpiles, and these usually using this strategic reserve, I mean the government reserves, strategic reserves, it fell more, and they fell more than 180 million. So we have less reserves right now, oil and petroleum reserve right now in the United States. So these reserves should be right to top. This is what Mr. Trump actually ordered. So the USA gonna refill actually these supplies and these reserves. So we will see most probably more demand for the oil. That was right after that Mr. Trump gave issued an order for US to resume processing the export of gas export or LNG export to the Asia and Europe. And before that, also, we know that the Mr. Trump issued another order giving we know that during the Mr. Biden's administration, we had some orders that the order of the drill, the more drills right now. They held some drills, especially drilling in the Arctic. So more drills, which several times he repeated, drill, my dear drill. So this more drills, which will bring more support in the market and when more supply in the market. So when we have more supply, and so that put a little bit pressure on the oil price. But after the first, I mean, the primary pressure on the oil price. After this, I mean, the market so had to put the market saw some pressure on the oil price because of more supply, possible supply. At the same time, we saw the orders to refill the reserves. So that means the more demand. They somehow balance each other, and now we can say that okay, the market can, after a little primarily decline, can market be a little bit stable around 75 or $76 because we have less. We will have, then don't forget that even if we saw, even if we see that more drills, that especially in the Arctic, it's going to take a longer time. So these drills and this production can take a time to come back to the market. That's why for now, still there's a cold winter, still, especially the orders of the refilling the reserves. So that can happen usually at the first can support the oil price. So therefore, we expect the oil price to stay around 75, 76 US dollar. On the stock market, we talk about Iran for especially about the US SP 500 in the weekly outlook. We talk about the 6,000 level, but we talk that it's so unlikely to see the prices higher than these levels, especially that we had several orders yesterday that can they can somehow affect the market. First of all, Trump ordered Federal Reserve workers back to the office. The part-time and full-time workers that they were working out of office, I mean, like remotely, they have to go back to the office physically. That can increase, this like layoffs in the companies, because some companies they cannot prepare the office or the physical place for those employees, so they will not probably continue to work with them. At the same time, some of them also maybe they deny to continue the physical job, and they would like to continue. If there is opportunity of working remotely, they can continue that. Otherwise, they may somebody them out. They leave the job. So that's why these order will affect the market, labor market, and we can see on the initial jobless claims numbers in the next week, which can be covered this week's layoffs and leaving the jobs. So at the same time, Mr. Trump ordered these orders of the labor market can directly affect the stock markets. At the same time, withdrawal from the Paris climate deal can change some companies' plans and programs, and it can also directly affect the stock market, which is not a positive news for the stock market. Another orders, in the during the Mr. Biden's administration, the government had an idea. It was not like should do, but it was an idea to reaching the 50% selling electronic car. I mean, to reach the 50% of electronic car selling the cars to be the electric cars, e-vehicles. So Trump took aim. So now the government doesn't follow these aims. So that can also affect the electric cars market and especially their stock. So we have to see what's going to happen in that markets. So generally, these data and these orders around about that they're not somehow the positive orders for the stock prices right now. So we can say uh, at the same time, we know that the Mr. Trump, as mentioned earlier, had an order to his administration to go and see and review the agreements with other governments and countries to see how orders they can be, how tariffs they can be, and how they can may change these agreements or cancel or leave the agreement. So that's why that increased the uncertainty in the market, and uncertainty never positive. Never, it's never it was positive for the stock market. So that's why we can say that for the stock market, what happened in the inauguration day was not a positive news. So we can expect one more time to stock market, especially the S&P 500, Nasdaq, and Dow Jones to get back to the overall downtrend which has been started previous 10 days on previous 10 or 10 days or 2 weeks. So that was the negative, and our expectation is a negative for the stock markets. On the cryptocurrency market, holding the 101,000 before holding 101,000 for the Bitcoin is a positive signal for Bitcoin to continue to go further. But generally, we now the market, before starting the government, this new administration and government, so the news of the Mr. Trump's coming back to the office was the fuel for this market. Right now, it's not anymore the fuel because he is already there, and the market reacted how it could react. So right now, the market reaction is over, and the market reacted already. So for now, we cannot expect to say that, okay, we can say that Mr. Trump is coming, so it's a positive news. Now we are expecting to see the orders, to see the decisions, so the market going to be more realistic. So that's why right after the inauguration, when the Bitcoin got reached to 110,000 almost, is back to the downtrend. Holding a 101,000 can be positive, but breaching under the 101,000, especially 97K, can be a little bit more negative or negative signal for the Bitcoin. But still, I told if it fell under 97,000. At the same time, we know that Mr. Trump launched a meme coin. At the same time, the first lady also issued this meme coin. So these issuing the meme coins could be another signal, which, for example, the Trump meme coin increased from $2 to $15 right after during the 1 or 2 hours. That can be the signal for the market that this new administration looking positively about the cryptocurrency market. So that can be generally in the long term could be the positive news and positive somehow a fuel for the market. But for the short time, market can be more realistic and see what this administration is going to decide and what's going to do. That was generally what happened in integration and how the market reacted to this. If you had any other questions, don't hesitate to write in the comment section. I'll try to get back to you and answer your question. Have a good time. Bye bye.